This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is Malcolm Pallay, the Executive Chairman, and Ben Proffitt, the CFO, that's the Chief Financial Officer of Coinsilium. Welcome to you both. Malcolm, first of all, a little while since we've spoken. How are things?
Yes, fine, thanks. Thank you very much for having us on.
And Ben, it's good to be speaking to you for the first time. How are you doing?
Yeah, very well, thank you. Good to meet you too.
Well, I want to start with you, Ben, because, of course, there's been the annual report, financial statements for the year ended 31st of December 2022. And, of course, a big element of that is a significant reduction in revenue compared to last year. So can I ask you, what steps are Coinsilium taking to manage its financial resources and maintain operational viability?
Sure. Well, of course, I think the first thing you've got to bear in mind is that our revenue is cyclical, right? So, our advisory clients, they pay us through their token generating events. And of course, these events run with the natural cycles within the business. So we're always going to have a very lumpy sort of revenue sort of stream if you compare it year on year, due to the fact that it traces the natural cycles of the industry. So in terms of our resource management, because of the cyclical nature of this, we always need to make sure that we have plenty of run room on our cash, which, we do. I think given, last year was a pretty tough year for everyone, and yet we still closed with £700,000 of cash, which is, more than 12 months of run room, probably closer to 18 months. And then in terms of the tokens, most of our revenue is in the form of tokens from our clients. So, that provides upside and downside in that we have upside access to the capital growth in the tokens. But we also then need to manage the downside to tokens that we think maybe there's a bit of risk there that we don't want to be exposed to. So we actively manage that to make sure that, the balance of upside and downside is covered. We've got plenty of cash and, always bearing in mind that, you make hay while the sun shines because, the clouds always come back at some point.
Okay. And as you, of course, your responsibility as CFO is the financial resilience of the company. Despite the market conditions over the last year, are you feeling pretty comfortable with where the company is at?
Yeah, absolutely. I mean, last year was a tough year, but we've got through that now. The industry is coming back and values are coming back, and it's always in these up cycles that you make your best business. And I think we've got a number of things to discuss today to talk about the new opportunities we've been pursuing. So I think we're feeling very bullish about the future.
Okay, and despite the sort of loss per share that's increased since last year, can you provide any insights on how the company plans to reverse this trend? I know we'll talk with Malcolm about some more details in a moment, but from your point of view?
Yeah, well, again, you've got to understand where the loss comes from, what drives that in order to really answer that question. And again, it comes down to the cyclical nature of the industry. So we posted a £2 million loss this year versus last year was about to break even. So obviously at first glance, that doesn't look great, but when you consider that actually the vast bulk of that result for the year derives from our fair value adjustments to our crypto assets. So just to sort of explain how that works, under IFRS, all of our crypto assets and the investments in crypto projects have to be fair valued every balance sheet date, which in a nutshell means you mark the values up when crypto prices are going up and you mark them down when crypto prices are going down. So that results in quite a lot of volatility. And in the current year, 2022, we've actually had to book a £1.6 million impairment charge relating to this because we started the period with very high valuations, given we'd had a really good 2021. So all the prices were very high. And then, of course, the downturn was pretty much entirely captured in the 2022 year. So the bottom of the cycle came towards the end of our accounting period, which meant that we've had to book this huge loss. But, when you compare that to the overall performance of £2 million, you realize that, that's the vast bulk of it. So, to really sort of answer the question around, reversing the trend, you've got to understand that there's nothing you can do to reverse the cyclical nature of the business. If you want to compare our performance, on a day-to-day management basis, you really have to remove that volatile amount out. And you'll see that, the rest of our costs have gone down last year because, we've seen the storm coming, so we've hunkered down. We've controlled our costs as best as we can. And, now as we go into 2023, the values are restoring. Those assets we marked down, they're still there. They're growing again. this is normal business for us. And in fact, I think 2018 was a good example in the past where we had a similar situation. We'd had a very strong year in terms of revenue generation, but then at the same time, because of all the revenue is in the form of tokens, and then there was another sort of crypto downturn in that year. Similarly, there were impairments that went through that, took the overall result to a loss. So, I think that the ongoing, view is that we're doing quite well. When you get rid of this volatility bit, you realize, okay, so you just need to make the most of when, the business is in a growth perspective. The industry is growing, which is where we are now. The value of our assets are increasing. We're expanding our revenue base, with this acquisition we've made recently of a new client portfolio. And generally, we feel pretty bullish about the future.
Okay, well, good. Thank you for that review. I want to just get a bit of a review of the year. And despite the conditions, as we've talked about there, in the digital asset industry during 2022, Coinsilium has made good operational progress. What has been the key strategy that has helped the company survive this tough market cycle, do you think?
Ben's covered a lot of that in terms of actually managing our resources. But also you've got to understand is we didn't sort of walk into this cycle, sleepwalk into it. We knew it's coming because it always does. So you have to prepare and you have to cut your cloth accordingly. So we don't go out actively banging the drum with particularly in terms of actually our services when there's no one out there who wants the services, but there are things we can do. So we focus on those aspects of the business, like, people still need to build. And that's one of the sort of memes of the industry. It's, this term hodl, which is actually just a typo, is hold, as in hodl your Bitcoin. So there's another meme, which is biddle, which is build, but you reverse the L and the D. So all projects build during this downturn. So we've managed to make some acquisitions, some investments during that year, which is really given us the scale coming into 2023 to actually help them develop. So that's really what we did. We just you make certain moves in certain conditions, you make other moves in other conditions, and now we're significantly into 2023 to the extent we're in the final, the H2, and the markets have recovered from the low in Bitcoin, which was in December 2022. In January, it's improved from 17,000 to 30,000. That is like a funnel. It drags everything else into it. It drags all the positive aspects. People start getting more confident. We then sort of position ourselves to what we expect to happen in the coming year, and it's happening a little bit faster than we expected as well. So, I think one of the key things we did is that we saw Alexis Nicosia, who runs Tokenomics, the work he's been doing over the period and getting advisory clients. We've known him for quite a while, and he's in the industry. He lives in Southeast Asia. And so, this was a natural happening, and he's now working very closely with Eddie on new advisory projects. And we thought would be good to bring this into the business. So we've acquired his portfolio of existing advisory clients, and we've targeted revenues on that. This is all subject to things playing out as the way we expect them to in terms of the cycle. So, if those companies go on to do token sales, then we'll get the success fees.
Okay. Well, we'll talk a bit about what you see the future in the cycle towards the end. I just want to go down into some of the more specific elements of Coinsilium's business, starting with Nifty Labs. Are you able to elaborate on Nifty Labs' shift towards Web3 social media applications and how this positions the company for future growth?
Sure. So we start, as quite often the way you start isn't always the direction you end up going. And the word pivot has kind of come up in this industry more times than you can imagine. So we initially set up Nifty Labs because we had, between ourselves and Endorse, which is one of our portfolio companies, have skill sets that we wanted to exploit. And the first obvious for us was to create an NFT marketplace, which was within Endorse's skill sets quite easy. Not easy is not the right word, but they had the skill sets to build it, and we saw the market as it was then. We then encountered and continue to encounter sort of regulatory uncertainty, because when you have a venue that trades or that facilitates the trading of digital assets, you need to have a clear regulatory framework around that to enable you to operate. And we had various models that we were looking at, putting in place, but it was taking longer than we were comfortable with to actually get us to a point where we could see that we could develop this commercially. It didn't cost us a whole heap to develop. That's the other thing. It was quite reasonable. But, those skill sets we had didn't go away. And we've seen coming sort of for quite a while on the horizon, this new kind of utilization of Web3, which is is the umbrella that covers everything. It's decentralization effectively, and what that could mean to the internet, because it's the next iteration. But the big opportunity we see is with Web3 social media, and it's not fully formed yet. So we can't sort of look at it as, we can't know exactly what the end product's going to look like. And we're not necessarily going to build a complete Web3 solution, but we know there's a lot of activity there, and we know we've got skill sets to actually take advantage of that. So just an example, social media at the moment is sort of Web 2 social media is coming up against tremendous issues and hurdles. You've seen what has happened with Twitter, where they've had to restrict the amount of people that can view a post, a tweet. And there's a technical reason for that, because they're getting as a centralized service, they're a target for all sorts of trolls, attacks, and the fact that you have to give up your privacy and they own your data. Facebook own your data. Meta has just launched through Instagram Threads, which is the new version. Or effectively, it's a clone of Twitter, and there's all sorts of fun and games are going to go on there. But in order to actually set up an account on Threads, you need to have an account with Instagram. And I'm not sure how true this is, but I've been told that if you want to delete a tweet or a thread, you then have to delete your account. You can't delete these things, or you can't change them. Now, this is all playing into the hands of what can Web3 versions of social media do that's better than what we currently have. Well, conceptually, they can solve all those problems, because you own your data. You decide how to monetize it in your profile. There's no central point of attack for any trolls or people who will abuse that. You control everything that goes into it because you own it. And you think about that, the only thing that we have to wait for now, and this is where the opportunity for Nifty Labs is concerned, because we have one of the main attributes of it is most of the applications work through NFT technology. So that's a big aspect of that. So we've got skill sets there with Endorse. But the user experience, as I said, is not quite where it needs to be to actually make it desirable for you to switch from the huge platforms that are out there to something more decentralized. But it's only a matter of time before that user experience becomes compatible, and then you'll start seeing the benefits. So it's like sort of another version of the internet coming along, and the amount of activity we see, lots of people are actually moving towards that. So watch this space with Nifty Labs. Just what we're saying at the moment, because that's really the direction we're going to go in. We're obviously doing quite a bit, but it's all stealth at the moment.
Okay, well, I look forward to seeing those developments as they come, Malcolm. But let's move on to another element of the business, which is, of course, is AI, artificial intelligence. Of course, a lot of things hitting the headlines recently, of course, with the rapid adoption of technology like Chat GPT, for example. How does Coinsilium plan to leverage AI and blockchain intersections for innovative applications, and what opportunities do you see in this space particularly?
Yeah, I think it sort of hit like a nuclear bomb. The Chat GPT, it went from 0 to 100 million users in less than 2 months. It's never happened before. That rate of adoption has never happened, and people are using it as it's a tremendous tool for. You just really have to go through the learning process of how to use it, and it's not that hard. It's just diving in, and once people start using it for all sorts of things, preparing presentations, just a more thorough, access to this infinite amount of knowledge that you can have literally by asking the right questions. Now, the only challenge with that is that, not all the answers are going to be correct or absolutely 100% accurate. And with the way machine learning works, people can teach the machine things that are wrong. So, it gives possible tools for trolls to actually start putting out fake news and having it embedded. And that's really the issue with what we call open sort of AI, which is open GPT. But there's also another opportunity with closed AI, which is for companies and projects to build solutions which only they can control the data that gets put in, and it sort of churns that and spits out the answers in a much more faster pace. So and of course, when you start looking at blockchain as well, which has got the ability to record data in an immutable fashion, then that's really something that's ready there and waiting for AI to actually work hand in hand with. So what we're doing is we are actively looking at projects that are working or expect to incorporate AI in their model, and we'll have no shortage of those. One at the moment is actually working very strongly in that direction, is a project we've invested in called Silta. And we advise them as well. And it's a infrastructure finance platform, which is, again, using blockchain, but it's also using artificial intelligence models to accelerate the ability of doing feasibility on a sustainable infrastructure project. It takes usually, on average, about 3 years just to do the assessment, feasibility, and structure of a loan to a project developer. If this can be cut in a fraction of the time, plus that it cut to a fraction of the time, plus the fact we're talking about sustainability and green projects where the clock is ticking, you cut 3 years off that, you're going to help this project meet its sustainability and climate targets in a much more efficient way. So again, watch this space with that, but we'll be definitely looking, and we are already starting to work with projects that are incorporating AI into their model.
Okay, well, that's good to hear, Malcolm. Of course, that is very topical, as we said, at this point in time. So it's good that you were able to sort of jump on that quite rapidly, which is obviously Coinsilium's general model, isn't it, to look at emerging technologies. But let's now look at the Tokenomic, is that how you say it, Tokenomic acquisition. How does this acquisition of Tokenomic, and particular its 7 retained Web3 blockchain project clients, bolster Coinsilium's position in the industry?
Well, again, it's positioning ourselves going forward to where we were. Ben alluded to the year we had in 2018, which was our first really second year active as a advisory. We had advisory capability, and our revenues that year were 1.68 million, and we advised some very large what are now household names in the crypto industry to do their token sales. Of course, at the time, no one knew really the names, but projects like Icon and Phantom and Eddie was advisor to those projects on the launch. So we generated significant revenues there. So what we're doing now is we're sort of looking at where we are, as Ben alluded to before, in the cycle. We're coming up to the point where the market is going back to where it was, and people are now planning their token sales. Our arrangement with Tokenomics was Tokenomics has signed agreements to help support these projects, these companies to do their token sale in the run up to that, and we earn money on that success. So those figures that we've put in the annual report, which are projected to be circa 1 million in revenues, which will come through the success fee, a little bit like an estate agent doesn't earn anything if he doesn't sell a house. When he sells the house, he gets his commission. So when these projects actually do their token sale, we get paid our success fee. And although the cash doesn't come in always straight away, sometimes there's a vesting period, but it's the same cycle as we had before. So the answer to the question is that this is just brings us a chunk of projects into the business, on top of the projects we're already working with within Coinsilium. So we're scaling up, if you like, to for the tidal wave, which we hope and are looking forward to coming once the market starts sort of ratcheting up.
Okay, and the expected revenues from this
Yeah, I was just going to say, just I think it's worth adding to that the sort of projection of £1 million of revenue over this sort of 12-month period, albeit that's before the vesting conditions, that's for the kind of fully signed clients. But we've also brought pipeline in with this acquisition as well. So there are clients that, we're still in discussions with them, or Tokenomics is still in discussions with, that we've acquired, where, we haven't quite signed on the dotted line, but there's future upside there as well. So, it's not just the figures we put in the public domain. There's other upside that we may be able to crystallize as well over, the next cycle.
Okay, and expected revenues from this service, that could significantly impact on Coinsilium's financials, could it?
Well, it did in 2018, and there's no reason why it wouldn't again, because we, as Ben alluded to before, our revenues are lumpy. We go through the lean periods without any token sales and without any ability to actually generate revenues in the same scale as we can when the markets are working in our favor. So yes, of course, everything is dependent on the cycle moving towards where we're moving. And that's really probably going to come to one of your next questions.
It is. Yes, indeed. That is the next question. Looking at the outlook here, you've mentioned there about the recovery in the sector. So, I mean, given that the recovery that we've talked about there since the start of the year and the Bitcoin halving, of course, next spring, what's Coinsilium's strategy to capitalize on these positive market conditions? This is the environment where, in theory, a company like yourself should thrive.
Yes, that's right, and that's what we're gearing up to. I think we don't have to do much. I mean, we have a lot of work to do, but really we have to recognize what direction the sun is shining from and heading towards that. So once we start seeing these benchmarks like crypto prices bottoming in December, recovering as they are now, heading towards the halving, which is really historically been a fairly reliable indicator of the direction of things. And there is a fundamental reason for it, because it reduces the amount of new Bitcoin available for creation. It impacts, obviously, the miners are all getting highly competitive. And there's one guy we follow on Twitter. His handle is Plan B. He's a very, very serious technical analyst, and he does this stock to flow model, which seems to work, and he's created a reputation over it. And his last view post that we retweeted, or his tweet, was said that the optimum time to buy Bitcoin is 6 months before the halving, and the optimum time to sell it is 18 months after. Okay. So we're heading towards that window, which the halving sort of comes in May. And we, say October, November is where, but it's already kicking off, you see. That's the point. So whilst, historically it's been November, it might come earlier. But obviously the halving will be when it is. So we don't want to sort of make ourselves hostage to fortune, but we're expecting, with all the negative stuff that happened out last year with FTX, with Luna, with the regulatory scrutiny going on, has led to some of the biggest players in the world coming into this space, with BlackRock and Fidelity looking at ETFs. And we expect a very strong performance from Bitcoin to go through to all-time highs. It's just sort of something embedded in our psyche. We see it coming. And obviously that drives everything else in the industry. With what we're doing, we're more discerning about the projects we get involved in to make sure that they have got the characteristics and capability to get in that slipstream of the Bitcoin, and Ethereum follows as well. So, that's really the key to it. We are expecting a nice, conducive environment for us to actually do what we do best.
Okay, well, it's good to hear your enthusiasm there for the Bitcoin price and the crypto space in general. Malcolm, just to finish off, is there anything you can say to investors that they should be watching for in relation to Coinsilium's involvement with the Yellow Network, Silta and GreenGage?
Yeah, I mean, those are three we picked out as being kind of the ones that are in play to expect news in the near future. Now, GreenGage is a digital merchant banking pioneer. They are set up to become a digital crypto-friendly bank. They haven't got their banking license yet. They've got their e-money license, and they've launched their e-money services. So we've just done a follow-on round with them. We've converted our loan to shares at an uplift valuation, and we expect them to actually start accelerating their growth. So looking for good news there to actually relate, and, to have what is effectively 2% of what could be a very substantial bank in the future is very exciting for us. It's, not going to happen overnight. Yellow Network is a broker-to-broker solution for crypto traders and exchanges. It's really well backed, and it's really has some very significant following. I think their Telegram group's got something like 70,000, and they're launching. We haven't got a precise date for when they're launching their project, but it is something that is going to probably take a lot longer to explain than we've got time for. But I would urge people to look at our annual report, look at our website, check out Yellow Network, and we invested in future tokens there. So we have got an allocation when that's released, and we think that's possibly going to be a very substantial project. And Silta, I mentioned before, was their focus on AI with their infrastructure finance capability. With the project they're working on, watch this space, because we're going to be sort of doing quite a bit more with them, and we expect some interesting things happening there with them. So those are three sort of touch points for investors to look at in relation to Coinsilium.
Well, thank you very much for that very comprehensive update, Malcolm Pallay, the Executive Chairman, and of course, Ben Proffitt, the CFO of Coinsilium. Thank you both very much for your time today.
Thank you.
Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.